We're back. We teased a mystery chart before the break. It is the CRB Raw Industrials Index representing a basket of commodities. It is up 31% this year. That is near all-time highs. And there is a new note out today by Goldman Sachs' Jeff Currie saying that despite tighter markets and higher prices, commodities remain broadly underinvested. We've made it our call of the day. When somebody like Jeff Currie makes a big call like this, we like to discuss it on the program. $80 oil price target for Q4 2021. Upside risks for the first half of 2022. Despite tighter markets, commodities remain underinvested, he says. Oil will likely be the catalyst to get investors back into commodities and the reflation trade. So it's an interesting call. Now's the time to get into commodities, says Jeffrey Currie. Bryn, what do you think? You agree?
Certain commodities for sure. You know, Jim Currie obviously is wonderful. I like his call on oil. I continue to believe that you have supply imbalances in the energy market that are going to be not transitory, that are going to be persistent. So I think that because the shale producers are coming offline, continuing to come offline, and OPEC is more and more going to be relevant to the oil economy, you're going to have, I think, a lot more volatility in the space. And I think that, as I said earlier, energy continues to be one of my favorite spots, but I also like things like lithium. I like copper. I think there's a tremendous amount of opportunity as we are going green. And the lithium trade especially has some incredible structural tailwinds, you know, over the next at least 5 to 10 years.
Okay, so take me through this trade then, because you did buy more of the Global X Lithium and Battery Tech ETF. That's the LIT. I teased it earlier, but go more specific now for us if you could.
Yeah, right. So a lot of people in the U.S. will buy ALB or Albemarle, which is the top holding in LIT. But you really have to look globally when you want to go into lithium. This ETF invests in the mining, refining, and battery production. But let me give you a statistic that is just incredible. So the UK has announced, like many other countries, that by 2035, they want to have all EV auto sales. So 100% of EV auto sales by 2035. If that is to happen just in the UK, that's going to require 3/4 of the global lithium production that we have today and 50% of the global production of copper. And that's just in the UK. And so I think that whether you're saying, you know, the lithium, the battery, the mining, refining, I like this LIT because it gives you that diversified basket globally of the full supply chain. And I just think as more and more countries adopt what the UK did, people don't understand there's this huge supply-demand imbalance that's not going to clear itself anytime soon.
Yeah. Pete, so you bought ExxonMobil November 55 calls, right? And Marathon Petroleum calls as well. So you're playing into the Jeff Currie story.
Yep. Yeah, and I have been for a while, though, Scott. I mean, this for me goes all the way back to November of last year. I've been very overweight a lot of the energy names, but specifically on the option side. And the reason that I've done that is, you know, I know all the ups and downs and the headaches of the trade, and obviously there's the social side of it and everything else. So there's a lot of reasons why, you know, I was apprehensive, but at the same time, take a look at where oil's gone from 38, and here we are over 70, and you take a look at what nat gas has done of late. So when you look in that space, the energy space, I totally agree with Bryn. I think that there's good reason to continue to be in there. It seemed like everybody wanted to jump in at 70 before, after missing the 38 to 70. We did get that pullback, and now it seems like we're starting to get that little bit of movement to the upside again. I think the copper trade is really important because, as Bryn points out, that is a major part of what goes on within the whole EV space. And that's something, that's why I've got Freeport Mac calls as well, because I still think that has plenty of room to the upside. I probably should have been in the stock, but I get a little bit of better bang for my buck when I'm in the options. So that's why I've stuck with that lately. But there's a lot of reasons, I think, in the material space, the energy space, that we should be excited. A lot of it is basically the catalyst of the EV space as well. So I think that there's a lot of reasons to be very, very bullish still in a lot of the various parts of the energy play.
You mentioned Freeport. We're looking at it right now. I want to underscore the fact that, Shannon, you own it, and you bought it at $4.50, and it currently trades at $35.44. You got a quick comment?
2016 was a good time to buy Freeport. I do want to say, to you know, what Bryn said, We've got to get a little bit more efficient with battery production in EVs. But, I think there comes a tipping point where we are going to need more of this. And I think that we're also on the back of a manufacturing rebound. We were in a manufacturing recession globally in 2018 and 2019. We're bouncing back not just from a pandemic, but from 2 years where we had lower output. So, I think there's some room to run here, particularly in the industrial metals.
Yeah, I got to go, but I wanted to give you some props there. 450 to 35.50. We'll take that any day of the week.